So we wake up today to another curveball, this time in the form of an indictment for the Federal Reserve by the FBI and the Department of Justice. One of the things that I am doing in my community is building upon all these subjects which I mentioned on TikTok and try and educate at a deeper level and provide the information that's actually as objective and real as possible. I see that the mainstream media, of course, today are saying that Trump has indicted Powell, but if you actually look at the detail, at this point, the information that we have is that this was done independently of Trump by the FBI director. So more to come. What's interesting about this is, there's the Iran situation on the side, which has flared up in terms of the geopolitics. But let's just be real about that. The Iran situation is incredibly noisy, as it always is. But the Iranians don't have any economic power or particularly any leverage. Threatening to shut down the Strait of Hormuz will result in Trump's going in there within seconds to shut that down. So there's an uprising, of course, which has been going on for many, many years under the hood. The Iranian people have had enough of their regime and they want out, and that is what's going on. So, but that's a sideshow to what what we've woken up to in terms of yet another question mark over the independence and the credibility of the Fed, which is obviously the critical pillar of the U.S. Economy and status in the world. So that's why futures are down. That's what's going on today. And listen, it's just a reminder for those of you who are trading these meme stocks and are max long the market and think nothing can go wrong. We're at a very interesting moment now where we've entered 2026 after the markets have had a massive rally in 2025. The put-call ratio is below 0.5. Every strategist in the world, even the ones that were bearish and have just thrown the towel in, are saying the market's going to go higher this year. Nothing can go wrong. Those are the moments when, if you've done this for as long as I have, you take pause and you consider the tail risks, right? It's always the tail risks that get you, the events that you can't really predict. And who knows how this is going to play out with the Fed, but it's certainly a bit of a curveball, and it's certainly a reminder of why my book, for example, is always hedged in a market like this. It's hedged almost full stop, but definitely at the moment. My shorts in QQQ and Ondas and Micron today are obviously going to help my book out enormously, as is my long in Diageo, which is defensive and obviously up nicely. The list goes on. But if anyone wants a reminder of why my book is hedged and why anyone's professional book is hedged in a situation like this, today is a good example.